everyone. My name is Roy Camphausen. I'm the president of the National Bureau of Asian Research. And on behalf of NBR and the U.S.-Japan Congressional Caucus, I'm delighted to welcome you to this year's Energy on the Hill event. As we know, 2022 began with countries around the world continuing to redesign their plans for economic growth in the aftermath of COVID-19, a process that was abruptly and dramatically disrupted by Russia's brutal invasion of Ukraine in February of this year. This ongoing crisis and its resulting impact on global energy markets has thrown a spotlight on energy security. As oil and gas prices rose, governments focused on securing their needed resources and diversifying supply to reduce vulnerabilities. Tied to concerns of energy security is the ongoing push to transition toward lower carbon energy systems and to design a future that utilizes advanced technologies to increase energy efficiency and decrease environmental impact. As governments consider how they might achieve their net zero carbon emissions goals, they must also identify secure pathways to source the materials and technologies for this transition. Over the course of this past year, NBR has partnered with many experts and organizations across the Indo-Pacific to examine these issues and build upon, as well as identify gaps in, the policies needed to achieve energy and climate security. Our research and programming over this past year has examined ways in which technologies, such as electric vehicles, industrial decarbonization, and nuclear energy, may be improved through cooperation with Japan and South Korea. We've also featured perspectives from South and Southeast Asia on how the disruption of oil and gas markets is impacting countries in those regions' energy security outlooks. We've identified ways to improve financing for and the bankability of energy projects in Malaysia and Southeast Asia more broadly. And we've discussed the potential for building partnerships to strengthen critical mineral supply chains across the region. As we wrap up the year, today's discussion is titled Changing Energy Landscapes, to reflect on the shifting strategies around energy security and how the United States and other countries across the Indo-Pacific can meet these challenges through strengthening both domestic policies and the regional cooperation necessary on the acquisition of critical minerals to build the commodities and infrastructure for supporting a lower carbon energy network. This Energy on the Hill event also serves as the launch for NBR's annual Energy Security Report. Now concluding its 18th year, NBR's Energy Security Program endeavors to consider the important geopolitical dimensions that interact with market factors, as well as ambitious energy transition goals to create a dynamic energy security environment. This year's program gathered global experts from a variety of fields to engage in research and discussion on critical minerals, global supply chains, and Indo-Pacific geopolitics. And critical minerals is an especially important theme as many nations are transitioning toward electric vehicles and other battery-powered initiatives that demand these rare minerals, with attendant supply chain challenges made more complex by the vagaries of international politics. This special report is now available on the NBR website and has been sent to all those who registered today. And if you didn't get that link, please talk to our team. We at NBR wish to extend our thanks to the speakers gathered here today for their time and insights. We're also appreciative of the U.S.-Japan Congressional Caucus for their cooperation in this event. This bipartisan organization of more than 100 representative members promotes strong trade, diplomatic, and energy relationships between our two nations that will continue to play important roles in global dialogues on energy and climate security. And a final note, I want to thank Mike Herberg, the Research Director for NBR's Energy Security Program, for the entire 18 years of its existence. He has a clear vision for our program to examine issues of security, development, and sustainability simultaneously for better and more sustainable policy outcomes. Special thanks to our MBR team, many of whom are here, Audrey Mossberger and Emily Sparkman for their coordination of events, Josh Nizam for his outreach to congressional colleagues, and to our Energy and Environmental Affairs team, led by Ashley Johnson, and including Micah Sindelar, Juliette Perrier, Tom Lutkin, and Chihiro Aita. And now, Mike, over to you for today's program.
Thank you, Roy. All those people that you mentioned there, those are the ones that make us look good when we sit up here and bloviate about what we talk about. So nothing what we do would be remotely as good without all those hardworking people. Thank you all for being here. It's terrific to see people in 3 dimensions these days. It's just such a wonderful new trend. It makes things seem live and real and important. Let me set a little stage of what we're going to do today. We do have the report that we just brought out. Sharon participated directly in that, one of the chapters in there, and that does focus on this issue of critical minerals, which obviously is becoming an increasingly important dimension of the energy transition, and an enormous question mark, of course. But we are living in interesting times more broadly in the energy world. It's the old Chinese curse, may you live in interesting times. We've got an energy crisis, a global energy crisis, which at least the immediate catalyst was the European Russian invasion of Ukraine, the cutoff of natural gas supplies to Europe, which affected all the rest of the global gas supply system, as well as increasingly impacting the oil supply system, with Russian supplies increasingly a target of sanctions and other things. That happened in the context of a longer period of underinvestment in both oil and gas supplies globally over the last, since 2014 at least. So the entire supply-demand balance was tightening and tightening and tightening, and was just taut as a violin string when the Ukraine crisis broke out. So it helps explain the extreme impact on European gas prices, electricity prices, and the reverberations across Asia. But it was a further catalyst in what was already a very precarious global supply and demand balance. So we'll talk a bit about the energy crisis and its impact on the transition, and is it accelerating the transition, or is it slowing the transition as countries scramble for any fossil fuel supplies they can to meet immediate energy needs. So critical minerals, the transition, and the energy security crisis we'll try to cover in an hour and 15 minutes. You have to have high ambitions, right, for climate and for these meetings, high ambitions. Let me just set a little stage on the report that we just did with critical minerals. It's no secret demand for critical minerals is just absolutely mushrooming as we speak to feed all the various new technologies for the energy transition, electric vehicles, batteries, solar, wind. All of these technologies require, battery storage require enormous amounts of all these things we've been talking about, lithium, cobalt, nickel, and more traditional old-fashioned minerals like copper and zinc, especially copper. There may be substitutes for many of these other things, but copper, I don't think there's any real physics substitute for copper in all of these various technologies. So, and I think if you look at some statistics, we have something like 17 or something operating lithium mine operations globally. We will need another 77 over the next 25 years to feed what we expect to be the demand for lithium. these numbers are just absolutely staggeringly multiples and many multiples of production as we speak. So not surprisingly, there's been a huge scramble amongst companies and countries to secure those supplies, just to make sure those supplies are there, because otherwise the transition simply can't happen, or at least at the pace that we're all hoping for. And of course, this has been enormously important across the Indo-Pacific region. And so you have corporate alliances, state competition, a real, battery arms race and critical minerals kind of arms race. Now, that's not happening in a vacuum, of course. And across the Indo-Pacific, you've got some geopolitical overlays which make this problem or this challenge even more complicated and politically contentious. The U.S.-China competition, increasingly intense strategic competition, economic competition, security competition, is an overlay to this, and what appears to be an intensifying competition for two countries that are deeply involved in the energy transition. And that's drawing in other regional players to pick sides and reaffirming alliances and a whole set of other geopolitical overlays to this scramble for critical minerals. The pandemic, COVID pandemic, disrupted supply chains from food to semiconductors, you name it, across supply chains. And so everybody is that much more driven to control their supply chains, critical supply chains, fueling their economies. And finally, the Russian invasion of Ukraine disrupted a whole set of new critical supply chains, obviously natural gas, but increasingly we're talking about oil and even some mineral supplies like nickel, where Russia's a huge supplier of nickel to the system, palladium, some other kinds of things. So all of those things are combined to make a scramble for the resources turn into a national strategic scramble for resources, and looking at a set of political and regional alliances also being locked into this scramble for the resources. So you're talking about ally shoring, reshoring, friend shoring, all of these kinds of things where you're basically saying, let's take these supply chains and have them only with our friends, only within our alliances, and you're getting kind of a balkanization of global supply chains and increased costs. So there's powerful forces driving this competition and control, drive for supply control. And then finally, you add the important wrinkle that who's in the lead for critical mineral supply chains. That's obviously China. China started on the electric vehicle, other renewables long before anybody else did, in a sense. So they're out there. They've been out there for 15 years, investing in mines, setting up processing systems, investing in their own production of graphite and rare earth minerals and other kinds of things. So China has this enormous lead, especially in the processing side. And everybody else is essentially, in the position of having to play catch up. Japan, South Korea responding with their own plans. The U.S. now has recently tried to step up to the plate to develop its own strategies for critical minerals. And we'll talk about that with Sharon today. So that China lead, I think, is a key pivot point, and that's what we were trying to see. How is everybody responding to that lead that China has, given these strategic tensions? So we'll explore a little bit the new energy geopolitics and how countries are responding to that, but also the transition, financing the transition, and what ADB and others are doing to try to maintain the momentum for the transition in the midst of a period when everybody is scrambling for whatever energy fuel source they can find, no matter how carbon intensive it is. So how do we, is the energy crisis going to accelerate the move towards the transition? or is it going to slow it down? So I think that's the elephant in the room, I think, in many discussions from my perspective. So with that bit of introduction, let me move to our speakers, and a bit of it just, we won't introduce in the sense you have the biographies and others, and we want to use the time wisely. We have first Sharon Burke from Ecospherics, which is a research and advisory firm, extremely knowledgeable about critical minerals and U.S. strategy especially. Leslie Behrman Lam from the ADB. She's the Washington, D.C. representative for the Asian Development Bank, is here to talk about financing transition strategies in Asia. And I don't have the right sheet with me here. Suzuki-san, I'm sorry, I don't have the right sheet here, and we just met. So Suzuki-san from the Japan Bank for International Cooperation, JBIC. And if you know what JBIC is, they're extremely involved across Asia in financing energy developments and moving towards financing the transition as quickly as possible. So with that, Sharon, would you mind saying a few words about critical minerals and U.S. strategy for critical minerals? Is it fit for purpose?
Sure. Thank you, and thank you so much for pulling us together on this, both this great document that you just put out and the panel today. I know it's going to be a really interesting conversation. So, you gave a great overview of where things are, and to say that commodity markets are volatile is sort of a given. They always are. They always have been. They've also always been strategic. I mean, going all the way back to the Iron Age, this is always about the foundational element of your economy, also about your military and defense, always. And it's always been a problematic market on the supply, on the demand, on the volatility and the continuity of the market. So in that way, this is the same. But what's really different about critical minerals, among other things, is climate change. That is a fundamental difference on the demand side. So even though it is not the first time that there's been a lot of demand in the United States or Japan or anywhere else for a lot of these materials, this is different because of the energy transition and because of climate change. And sometimes you will hear people saying, well, we can't do this. We can't find all the things we need at the scale that we need them, so we just can't do this energy transition. I just want to start there by saying that that's just not only irresponsible, but just a ridiculous proposition, because we don't get to choose. This is a transition that has to happen. This is something that is happening. So starting there, other reasons for the demand, of course, is it's not just clean energy transition, it's also all of these devices. The digital age economy relies on the same materials. Maybe not, an electric vehicle takes a lot more cobalt and other elements than this does, but it's a digital age economy. You can't have it without it. You can't have a modern military without these materials. So the competition is within an economy and then global across the economies. So that's on the demand side. On the supply side, again, a lot of these materials, you can find them almost anywhere, but not in concentrations that are easy to produce or economically viable. So they tend to be highly concentrated in a few places. At a high enough price, more places will open up. But of course, when you get that high a price, there are other problems. So we've got dramatically escalating demand in a very short period of time. Consider that this smartphone was introduced in 2007. So never mind the clean energy transition. These are very sharp demand curves. And then the supply picture has also been shifting dramatically in a very short period of time. Not just that question about who has it, who can recover it, who can process it, but also with the war and with the pandemic, these supply shocks have also been formidable. Okay, so how is the US government responding to this? Slowly for a long time. As you said, China has developed a strategy and been executing it since at least 2003. and they deserve a lot of credit for having foresight. And their strategy has been to develop the resources and the processing. They have an extremely strong comparative advantage in processing at home, and then make investments worldwide. Whereas the United States had a lot of faith in the market and in private companies. And that's important. It is also a very strong advantage, but not strong enough when you're talking about that supply-demand picture. So you first saw now, again, the United States has done this before. In the Cold War, in World War II, the United States had strategic minerals policies. But once the Cold War ended, we were done with that. In fact, we started to liquidate the national stockpile of materials and minerals. So we've been slow to adjust to the fact that market means weren't going to be enough. You saw some activity in the Obama administration, a little bit. There was a study out of the Department of Energy on rare earth elements and another one out of the Department of Defense. They started to put some policy motions in place, not very much. In the Trump administration, that accelerates. And then, boom, now you're in the Biden administration where there's just been a plethora of initiatives and investments and policies, starting with an executive order in the first week in office. So this, again, for a policy ramp up, it's been pretty steep. I think what you need to see, where there needs to be a change at this point is there needs to be a strategy that makes sense of it all. Because right now it's a whole lot of activity, but how does it all work together? How does it build? You know, again, if you're going to use government policy mechanisms to try to advance your industry, you don't want to just kind of throw spaghetti at the wall. You want it all to fit together. And there's, as I said, there's a lot of activity here. So to what end? That's something that really needs to happen now. Now, having said that, the administration has put out a 100-day plan that makes it clear what the bottom line of their strategy is, which is to increase domestic production and processing, and also to increase international cooperation. And it's really important to note that that's not just on the supply side. So while Canada and Australia have been very important focal points of this administration's minerals policy, Japan and South Korea and other major consumers, the European Union, are also very important parts of that policy because there's a lot of power on the consumer side as well as on the producer side, and even more in collaboration. So you called it friendshoring, reshoring. They've used those terms. It's really important to say that it has to be both pieces. Because I think in the Trump administration, a lot of the emphasis was on the domestic and increasing domestic mining. It will never be enough. So it has to be cooperation on both sides. And then bringing together all those government tools and programs and investments and making them make sense. I think that there are some other things that they need to add. First of all, I don't think we have good analysis on the demand growth, not within the US government. And that's really important, again, because we're talking about foundational elements of the economy and of where we need to take the economy. So understanding better demand growth for what end use, for what materials, by when, is going to be really important because you can't just do all things to all people. We're going to have to be much more targeted. So better understanding of demand growth. Another really important area that the administration is talking about but hasn't yet been clear about what the policy is on environmental, social, and governance guidelines. This is a huge problem for the mining industry. Social license to operate is a problem all over the world for this industry for good reasons. There are lots of good operations that try to work well with communities, and there are a lot that don't and aren't. So there's a legacy there, and you can't just erase it because suddenly we have an urgent need. Because if I was at a conversation the other day where someone was talking about the mine in Mountain Pass, California, which is a rare earth elements mine, and how it was ridiculous that this mine was allowed to go bankrupt, that should have been saved. But you have to go back to why that mine had so much trouble. And one of the reasons was it wasn't run very well. One of the indicators of that is that they had a major spill of toxic material. So you have to do this right on the front end because it's a lot more expensive and difficult. and including in social license on the back end. If you burn a community, if you pollute the water source, that is really hard to undo. And particularly if you do need to increase these mines, it has to be done right on the front end. There are no standards for environmental, social, and governance. And governance, we have all seen with oil and gas what it means if you don't have good governance on resource recovery. It's not too late to continue to fix that, and I'm hoping we'll hear more about that from my colleague, especially in places that are really ramping up fast. The legal framework can be improved. So there is no international standard on here. There are voluntary standards. Some of them are put out by industry. There's also an organization called IRMA, the Initiative for Responsible Mining Assurance, that's collaborative with NGOs, with mining companies, with governments, that I think is considered a very good standard. So that it may be that IRMA will become the way to go. It's a little, by their own admission, slow. And slow to need at this time is not going to work. So this is an area that needs to be improved and needs to be better articulated. Innovation, mining does not, the margins are such that there's not a huge investment in research and development. And we have to be able to do things better. A great example is titanium. So there's a squeeze on titanium markets right now because Russia and Ukraine are major producers. Titanium is very difficult to produce, a very polluting process. It's a process that hasn't been improved in a century. So in 2014, this company, Hyperion X, got a grant from ARPA-E, which is the sort of innovative support infrastructure at the US Department of Energy, to improve titanium processing. And they did, and it's a much better way to approach this. So this is going to be better on all, as far as profitability, but also environmentally, everything else. And they're now ready to go to market. So, these things can happen. We can improve processing, we can improve mining, we can improve end use, which is going to be crucial, because if we don't make the problem smaller here as far as the materials we need, we're never going to succeed. We can improve recycling, including, for example, tailings and wastewater from mining. You can recover minerals from those. It needs to be made more affordable, but also post-consumer waste recycling. It needs to be made more affordable. That itself is also a polluting process. That's ripe for innovation. So there needs to be more investment in that. And then innovation of a different kind too, like institutional innovation and modernization. The United States, I believe the law on the books that governs a lot of our mining is 19th century, 1872, I believe. You can bet that what we were concerned about then is not what we're concerned about now. It's very difficult to modernize those kinds of laws, but we have to do it. Again, our future depends on it. So the law, the legal framework, the policies, the institutional structure. So who in the US government is in charge of mining? Like if you're talking about that whole big picture, where's policy coming from? It's coming from a lot of places. The Department of Interior, the Department of State, the Department of Energy, the Department of Defense. Within the White House itself, there are multiple offices, at least 5, that are making policy in this space. So there needs to be some institutional modernization about how we make policy in this space. And also there's a capacity problem there. All of that, wealth of people who are coming to the table masks the fact that there aren't that many people working in this space. So when you got something that's ramping up this fast and you don't have enough people to work on it, you run into roadblocks, you have gaps. Again, if you want to accelerate, you can't if you don't have the capacity. So that's, to me, a modernization challenge for the US government. And then just a last thought is that the United States has sort of an allergy to industrial policy. We don't like the idea, we don't like the concept. But it's that sort of bright line we're losing. We are losing the competitive, the global competition for this modern economy. We can do both. We can have an industrial policy that supports our industry without undermining it, so to speak. We can have it both ways, but we need to be purposeful about that. And I think there are some little things that I just have to mention because I think they're a symptom of that sort of aversion to industrial policy. So and among other things, for example, we really need to sign the UN Convention on the Law of the Sea. That the objections to it go back to the Reagan administration, and they have to do with sort of this one world governance and not wanting supranational institutions. Maybe that was something that could be a debating point that kept us from that treaty. And you know, I come out of the military community. The military always thought that that was a mistake and that we should have ratified that treaty for the sake of military operations and international freedom of the seas. But now we're also talking about technology is making materials on the seabed accessible for the first time. And, you know, it's not clear that that's going to be a wise thing to do environmentally, but again, there's no free ride here. Any way you want to have this device, it's going to rely on materials that are, you know, pulled out of the earth and processed. And that's never going to be a 100% clean process. So we need to analyze the trade-offs and understand, but it may well be that seabed recovery and mining is going to be a better choice than some of the terrestrial mining. We don't know that yet, but if that turns out to be true, the United States can't compete for those concessions because we're not party to the law of the sea, which is how the concessions for those, for that resource is being decided. And guess which country is competing the most for that? Yes, it's China. So we're not there. And if we do decide that there are environmental consequences that are not worth risking, we don't have a voice because we're not at that table. So I think that the United States needs to take a much more overall strategic look, not just a strategy that binds together all these initiatives, but a strategy that also looks at our long-term strategic interests and the fact that we need to make an energy and while we sustain the competitiveness of our economy. So it's a lot of good news. There's still a lot of work that needs to be done, but I'm very optimistic that it's an administration that's supportive, that it's a bipartisan interest, that there's a lot of agreement across the aisle about policy in this space, and that it's a necessity. So there's a lot of good news and then just some work to be done.
Thank you, Sharon. Thank you, and thank you for writing the chapter in the report. I recommend it very highly. I'm going to just ask one question, and then I'll let you all have questions as we get to the end of the three presentations. And by the way, those of you who are live streaming the event, you can submit questions if you email those to the email to pacificenergy@nbr.org. Good. Just one question. You mentioned the bipartisanship element of this, and that's one of the things I was, wondering, do we have the industrial policy chops when you compare Japan, South Korea, China, other countries that really can do industrial policy? You sound as though you're concerned about that as well. But the bipartisanship, can you talk just a second about how much you feel there is consensus across the aisle about the need for the minerals and the policy, but a similar view of what kind of policies it's going to take?
I do believe there's a very strong bipartisan consensus that minerals are a strategic part of the U.S. economy, for the digital age economy, but also for the United States Armed Forces, that access to those supplies is necessary. So I think there's recognition that we need to change course here. And that I think there's also broad recognition that means some action at home and also increasing our collaboration with other countries, with producers and consumers around the world. I think those things, very strong bipartisan consensus. I think there's been a lot of investments that have bipartisan consensus. So, for example, at the Department of Defense, they are the lead agency for the Defense Production Act. And Title III of that act allows the U.S. government to put money to catalyze domestic industries in strategic areas. They don't have to be just for defense. It can be economy-wide. And both parties have supported using the Defense Production Act to increase investment in mineral, in mining and in processing both in the United States and around the world. So I think that there's a lot of consensus there. I think there's consensus that there needs to be reform in the Mining Act. It breaks down a little bit when you get to the specifics. I would love to see a reopening of the UNCLOS, of the Law of the Sea. I think maybe, that's sort of a white whale for people in the international community that we're always chasing. But I think maybe it's time that there might be consensus there. Where the consensus gets a little more interesting is in the energy transition. When you talk about a clean energy operation that's in someone's district, like a battery factory, there's no disagreement there that that's a good thing. Both parties want to see battery factories. They want to see solar panels. They want to see that economic activity in their districts. But the overall context of the necessity of an energy transition that must be fast, there's definitely some politics there. So, for example, the Inflation Reduction Act, actually, you could argue, is industrial policy, since it's not a direct grant. It's a series of loans that are trying to stimulate the private sector. But obviously, there was not bipartisan support for that act, and I think we can expect to see some theater over it in the coming year. But like I said, I think that's almost like culture war theater disagreements. When you get under the wave tops of that, there's a lot of agreement and a lot of consensus building and work that goes on across the aisle. So there's going to be some fireworks, but real work underneath it.
Thank you. I appreciate that. We're going to transition, we're talking about the transition, so we're going to transition here. We have Leslie Bierman-Lam from the Asian Development Bank, and I know that ADB, Asia is ground zero for carbon, CO2, coal, oil. Nothing's going to eventually work if Asia, especially developing Asia, comes along. And ADB's deep, up to its armpits in this. So could you talk a little bit about what ADB is doing in the energy transition, and if you have any thoughts on the critical mineral side as well?
Yeah, thank you. And it's a pleasure to be here, so thank you for inviting us to participate in this discussion. So just to provide a bit of context, Asia Pacific region, as we all know, has experienced remarkable growth in the past decades, and energy has been a significant and critical component of that growth. But as Sharon notes, there's no free ride. And the consequence is that right now, Asia Pacific region accounts for roughly 50% of all greenhouse gas emissions. So as sometimes you have to state the obvious, and ADB's president has done so and stated very clearly that the battle for climate change will either be won or lost in the Asia Pacific region. So the way to address this, and the way that ADB as an institution is trying to address the transition from a fossil fuel economy to a renewable economy, has to be balanced with the need to ensure development continues. We're a development finance institution, and that's, we have to support this transition in that context. So we need to ensure that climate change doesn't actually retard or or put at risk the development gains that have been achieved over the decades. And I think as an institution, we believe that the transition to clean and efficient energy is fully compatible with economic growth. We don't see a tension there. We realize that investment in low carbon development not only gets us to a net zero future, but it also actually increases prospects for growth. You see the cost for renewables coming down significantly. And as the transition occurs, it may be that, in some cases, they're going to be cheaper than the traditional fossil fuels. You need to think about gains from high-quality jobs in the clean energy industries, such as automotive, construction, energy efficiency, et cetera. Those contribute to development and growth. And also, you have to think about the mitigation and effects of reducing future costs of potential disasters. So just to summarize, I think we'd say that economic stability and energy transition are interdependent. They're not mutually dependent. But there's challenges, and as you've noted, COVID is one, and also the Russian invasion of Ukraine is one, and the economic and geopolitical instability has also hit Asia. So this also puts at risk the amount that countries have to invest in the clean energy transition. Asia's, and the region that we cover is quite broad, and we have a very diverse set of countries that are facing a very diverse set of impacts. So for example, we have energy importers. And for energy importers that are in particular facing balance of payment issues such as Pakistan and Sri Lanka, you know, the higher cost of energy is very challenging for them. But we also have energy exporters such as Kazakhstan, Turkmenistan, Azerbaijan, and they benefit from the higher energy prices. So we need to have an approach that's going to address the very diverse interests of all of our countries. So we need to scale up investments in energy efficiency and renewable energy. So how do we do that? ADB is a financial institution, and that's one of our main objectives and mandates, is to help in this transition. Obviously, climate finance plays a major and significant role in this transition. And to that end, we like to put our money where our mouth is, and we have committed $100 billion of our own resources to apply towards this transition from 2019 to 2030. Pre-COVID, we estimated that the Asia-Pacific region would need $1.7 trillion per year to meet resilient climate infrastructure needs. That's an immense amount of money. And that cannot be done with sovereign finance. Just huge amounts of money need to be mobilized towards this objective. And furthermore, the role of a development finance institution such as ADB, the kind of older model, I would say, of a dollar in, a dollar out, is not going to cut it either. So we need to find ways to raise the volume of resources and leverage various actors in this process. So what we do, so one of the ways that we feel these are new areas, you're looking at new technology, in some cases you're looking at you know, just new ways of doing things, and you're looking at new actors, and you're looking at risks. And the perception of risk, you know, be it perceived or real, is different across various investors. So one of our main functions is to, or we have lately found that de-risking investments is one of the key ways that we can help to mobilize the private finance that's critical for this energy transition. We're always looking at innovative ways to leverage contributions from our partners, from the governments with whom we work, to enhance our ability to do more and deliver more innovative and effective solutions. So we have a number of tools at our disposal. I'll speak in the broad sense. We have blended finance vehicles, which is using concessional money to attract private finance. We have project preparation facilities, technical assistance facilities. We act as an anchor investor in blue and green bonds, other SDG bonds, credit enhancement products, et cetera. And we're always seeking new ways to innovate and attract more finance and get more traction to finance the transition. So I just want to highlight 3 examples that ADB has developed as of late. The first is called the ASEAN Catalytic Green Finance Facility. We love acronyms, or ACGF. And ACGF is a facility that's in Southeast Asia, and it's about $2 billion in donor financing from 9 private and public financing partners. And the function of that is to prepare projects for ultimate investment by the private sector that will be less risky. So basically it's preparing bankable projects that will reduce the cost of equity and debt ultimately to get those projects off the ground. We have another facility that's under development. It has not yet launched, but I did think it was worth mentioning. It's called the sorry, it's a mouthful, Innovative Finance Facility for Climate in Asia in the Pacific, or IFCAP. That's a little bit of a different approach. That is looking at guarantees, contingent money as a means of leveraging private finance. And we're expecting that to be a very powerful vehicle once we get that launched. And finally, I wanted to elaborate on the energy transition mechanism, which is sort of our flagship initiative that was launched last year at COP26. The overall objective of the ETM, and it's that phrase is used in many guises, but for us, it is a vehicle that is intended to reduce gas emissions in the greenhouse gas emissions, in the power sector fueled by coal. And what we do, and what the project will do, is to either retire or repurpose coal-fired power plants in Asia far earlier than they would be retired, if they ran their life. They're very young in Asia, so they have a long life, and we want to shorten that life. It's intended to be a market-based approach. So again, accelerating moving from fossil fuel to clean energy. It's very comprehensive. It's leveraging public and private finance and concessional capital to accelerate the coal retirement. That will be, I don't want to get into too many details. I can if people are interested, but it will comprise two different funds, actually three, but I'll focus on the two. One is a fund for retiring coal-fired power plants, and the other is a fund for developing the renewables that will replace that energy that is no longer available through those plants. So we've made significant progress in a year, going from conceptualization to actually signing an MOU last month. Now we're in December. So in Indonesia, we've signed an MOU to retire Cirebon 1, as if I pronounce it improperly, I apologize, power plant in West Java. This will be the first coal-fired power plant to be retired under the ETM. And we've been working on identifying pilots. We've been looking at feasibility studies, possible financing mechanisms, and we've identified a pool of candidate projects, Indonesia being the first country, and I think the G20 was a big support to that, to Indonesia moving forward quite quickly. We hope that Indonesia, in this experience, again, this is a pilot basis, will provide an example for other countries, and that this can be scaled up in other jurisdictions. We have tremendous donor support. It's growing. The governments of Japan and Germany have each contributed roughly 25 million to the fund. So that's also a way of saying that the just transition, it's not a single actor. It's not an institution. It's not a government. It's really a very comprehensive and very multi-party effort, including on governments, multilateral institutions like ours, the private sector, philanthropies, and civil society as well. So we're looking at. This is a long journey. We've started it. We're being innovative in how we address it because, as you said, it's here, and you got to find a way to finance it. So, as ADB's climate bank, as Asia's climate bank, we look forward to continuing in the process. Thank you.
Thank you, Leslie. Just, if I could, just leave it on, I think.
Okay.
There was a set of private institutions that put together a fund to try to buy coal plants and shut them down early. And they ended up saying we couldn't find any partners because they didn't want to be associated with coal anyway, even in the right way. And so, coal was so negative that they just didn't want to have to explain to their shareholders what they were doing. Might be too complicated. Have you had that kind of pushback, I suppose?
That is feedback that we received from the partners we were looking at. I mean, this has been a very long process. Actually, it actually hasn't been. I mean, we've done this on an extremely accelerated basis, but in our discussions, that was a very clear concern that we can't, the initial concept of how this was going to be structured was that the investors would purchase the power plant. And then, as you state, there was a lot of concerns about not wanting to be seen as owning a coal-fired power plant. That said, so we found a way to structure financially around it. It's called a synthetic financing. It's kind of like a bridge financing in a way. So there's no ownership involved, but to be fair, there's also, despite that, there's still a bit of concern as being investing in this. But I think you have to look at the narrative in a much broader perspective. Yes, you're investing in it, but for a specific reason of retiring it early. It's not to run it, you know, to make a profit on it. But financing it is hard. You don't want to, you know, you're shortening the life, so the investor has to get their return. You don't want to overpay, you don't want to underpay, so it's not easy to find that sweet spot.
Yeah. Thank you, I appreciate that. And again, we'll open it up in just a little bit for questions from the audience. Now we have Hiroyuki Suzuki. I finally get that right. I apologize again. And would you like to talk about JBIC's view on financing the transition? And I think you suggested some comments on hydrogen, Japan's hydrogen strategy. That would be excellent. Thank you.
Thank you, Mike. First of all, thank you very much for having me today, and it is my great honor to be the discussion with the part of the discussion with the distinguished speakers. Before talking about the energy transition in Asia and the hydrogen, I little bit talk about the JBIC's general profile of the JBIC. JBIC is a policy-based financial institution, 100 owned by the Japanese government, but operate quite independently. And we start our operation to support the Japanese export from 1950s, and evolve in the time to time to support the Japanese industry's investment overseas. But recently we are expanding more to support the global agendas, of course, especially in particular the climate change. So one of the characteristics of JBIC is we are starting from closely communicate with the private sector. And we also have the principle to co-finance with a private financial institution. So we are very good at communicating with the private entities, both from the manufacturing, the trading houses, and also the private financial institution. It's totally different from the Chinese Belt Road Initiative model. So in this context, we understand the U.S. counterpart has showed a strong interest to collaborate with JBIC, including USDFC, USEXIM, and the USTDA. So regarding this context, I'd like to talk about firstly about the energy transition in Asia. So JBIC released its ESG policy last year, announcing the commitment to pursue net zero by 2050 under the holistic approach. I mean, with two pillars, not only the green financing, but also the transition financing. One of the key point or key challenge in Asia is still the natural gas and LNG still plays an important role during the transition period as an energy source which provides a stable supply of baseload power. Especially after the Russian invasion to Ukraine, the global economic community is expecting for appropriate balance between the decarbonization and the energy security. So in this context, Japan's Prime Minister Kishida announced a new initiative we call the Asia Zero Emission Community. So we call AZEC or AZEC. Please remember this new initiative, AZEC. So the concept of AZEC is to help Asian region to achieve sustainable economic growth and the carbon neutrality at the same time, mobilizing the private investment. So this is to realize realistic and diverse transition. As Leslie mentioned, Asia is a very diversified region. And so promoting promoting the use of natural gas energy is one of the most important elements supporting the ASEC. I also would like to mention that the nuclear power is also gaining increasing attention from the region in the mid and long-term perspective. So under the ASEC vision, with a holistic approach, JBIC's holistic approach include not only the green financing and transition financing for including the natural gas LNG project, we would like to be something like a good bridge between the host countries and the other international initiatives such as JETP or ETM and ADB's effort. But we would like to, I'd like to stress that we would like to collaborate more with our US counterparts as much as possible, such as the USTFC and the US EXIM and USTDA. That is a brief explanation of our effort to support the energy transition in Asia. And I also would like to talk about the hydrogen, our effort, both in domestic and the international. The key challenge of the hydrogen is to create a value chain, both the supply side and the demand side at the same time. And we had such similar challenge about 15 years ago to create the LNG market. So 50 years ago, Japan played a very critical role to establish a whole value chain of the natural gas. So we would like to tackling with such kind of effort for the hydrogen. So in this context, firstly, JBIC is providing risk money by utilizing its fund investment capacity. As part of this effort, we committed already 100 million euros to the world's largest hydrogen fund, Clean H2 Infra Fund, as an anchor investor. And in the US, we have also invested with the Japanese company to the hydrogen stations project in California. So in domestic side, the Japanese government, especially the taking a leading role by the METI, Ministry of Economy, Trade and Industry, announced already the hydrogen strategy in 2017 and the green growth strategy in 2020. And we are working closely with the Japanese government. The Japanese government has already supported R&D investment with a $20 billion Green Innovation Fund. And from next year, creating the demand, Japanese government is preparing the price gap compensation mechanism between the current hydrogen price and the existing fuel price. So I think it is very similar to the contract for difference mechanism in the UK. So it will be funded by the GX Economy Transition Bond, general framework to be announced, we expect by the end of this year from the Japanese government. So finally, I would like to touch upon the international effort. I also would like to talk about some collaboration, especially with Europe and the United States. So Europe already has announced Repower EU and accelerating moves to expand the deployment of the hydrogen. And this year, US is also supporting the creation of the demand by reducing the cost of hydrogen supply through Inflation Reduction Act. So one idea is to collaborate, for example, between JBIC and the DOE Loan Program Office to create a US-Japan policy-based finance package to support the hydrogen deployment in the US. We are strengthening the dialogue with DOE Loan Program Office right now. In the third country, we would like to collaborate with DFC, EXIM, TDA. So in any event, we are eager to provide a wide range of financing support from upstream to downstream, both in the developed country and the developing country, to create a resilient value chain of hydrogen. Thank you.
Thank you very much, Suzuki. And, you know, the whole trick, or at least one of the key tricks of hydrogen is scale. You know, how do you get the scale and then bring down costs? So I mean, the idea of a contract for difference, that's a really interesting notion. Can you just say a few more words about how that's set up?
So to reduce the cost, there are two challenge how to engage many players as much as possible to create the market bigger and bigger. So that is the one way to reduce the cost. The second is how to support a new type of technology. So for the first time, we are starting the discussion with the other market players as much as possible. Not only the potential hydrogen consuming country, but also the hydrogen producing country, both green and blue. Mm-hmm. So I think that next year would be the very interesting year. And now that COP28 will be hosted by the UAE. So I think the next year would be the very critical year to collaborate more between the energy consuming country and the energy supply producing country to promote the hydrogen market as much as possible. And secondly, to reduce the cost from the technology perspective, from the financier's viewpoint, it is very challenging to assess, to make a due diligence of the new type of the technology. Mm-hmm. So in this regard, the JB created a new account to take more risk to deal with a new type of technology. For example, there are no commercial operation under the certain type of the technology. It is very challenging to get the commercial financing. So in that case, JBIC utilizes this special account to support such kind of the project to reduce the cost in the future.
Mm-hmm. Interesting, interesting. Well, we've got a lot of material on the table here, lots of interesting stuff, and three obviously brilliant people up here that can elaborate on this. So I'd rather than keep asking my own questions, I could do all evening. Let me begin to open it up to folks in the audience. I know we've got some people out there that are pretty deep in this this material. Yes, sir.
Yeah, question for Ms. Lown. When you replace a coal-fired plant, I assume there's a requirement that the new plant not be powered by coal. What energy source do you think would power the new plant, and are you able to calculate any cost differential? How much more expensive the electricity produced by the new plant might be?
Yeah, so the repurposing, I don't understand the technology particularly well, but it would be, if it were to be repurposed rather than just shut down, it would be repurposed for some clean energy usage. The idea is that when it is retired, that energy is replaced, and in parallel, new plants, new renewable sources of energy production will be being created to replace the retired coal. In terms of the cost, I mean, that would be on a case-by-case basis, depending on the source of energy. But the idea and what we are seeing is that, that cost to the renewables will ultimately, the trajectory is that it will be cheaper than would be to continue to run a fossil fuel plant.
But you haven't had any experience with that.
We're just doing the first pilot, and we just signed the MOU, and hopefully we'll see how that goes and be able to answer some of those questions.
Yes.
Would you like this?
Hi, Bob Eichord from the Atlantic Council. Sure. The key issue of the role of gas in Asia and what the current situation and the likely shortages over the next few years means in terms of the progress that we were seeing quite dramatically in Vietnam and other places with regards to the willingness to invest in LNG, FSRUs and other ways to import LNG. And I was looking yesterday, the price was $30 a million BTUs in the Asia market for LNG on the spot. I mean, to what extent, one, especially Leslie, from the ADB standpoint, are you really embracing the LNG movement, I mean, we know countries, so, you know, like ASEAN have 25% renewable targets and stuff like that. But to what extent are you really embracing it? And how can you, if you are, how can you do that in a way that you make sure that the infrastructure is indeed as low carbon as possible, and two, is ready for blending and hydrogen imports? And I think that's relevant, obviously, in Japan, too, as you know, Suzuki, in terms of that issue. Because, I mean, I think we have to come to grips with that. Are we seeing countries backing off on that strategy? And what does that mean if they're going to continue to run their coal plants because the price is too high or they can't get the supplies? And if, so over the last year, we've seen LNG exports from the US shifting from Asia to Europe. So 70, 80% of our LNG went to Europe this year, or last year, and this year too. And so I think the issue that if Asia starts growing again, and that demand for gas increases, I mean, it's gone down some in China, so that's had a big impact, and probably in Japan too a little bit. But so how are those market dynamics being viewed by the countries in the region with regards to staying that course of importing LNG?
Leslie or Suzuki-san?
Yeah, please first.
Just, I'll give you the response from the Asian Development Bank's perspective. That's guided, I mean, our involvement in LNG is guided by our energy policy, which was recently approved last year. And our energy policy prohibits ADB's engagement at this time from exploration or drilling in gas. Gas is seen, given the diversity of our countries, gas is seen as recognized as a transition fuel and a mechanism, but our involvement in terms of financing LNG is very limited, and it's very circumspect, and it has to go through a very rigorous analysis in terms of, is it least cost solution? Is it the only viable solution? And so from our perspective, we will stay in gas, but under very limited and very, very circumscribed circumstances. So, and, we are really pushing and doing all we can to push towards an entirely renewable future.
So that includes gas power plants,
Yeah.
as well as FSRUs?
FSRU, sorry.
Those are the floating regas plants.
No, we do floating solar, and we're looking at floating wind, but we're not doing floating gas.
It seems to me that gas in the ADB context is the domestic infrastructure to utilize the gas rather than the LNG, side of the business. By the time it lands, you put it into a pipe on shore. That's where ADB might be more, find it more fitting ADB's mandate. I know, yeah, that's why I pressed it, because we all know this is a very difficult position.
So you're saying that you are not going to provide, you're not going to finance gas combined cycles or power plants, even though they could begin to blend hydrogen and some green hydrogen in that supply chain? Because I mean, that's the issue. How do you transition to a hydrogen economy?
Yeah, no, I'm not saying that. I'm saying that financing exploration, drilling, and that element component of gas is not on the table. Financing what you're talking about is on the table, but it has to go through, if there is an alternative that is purely, if it's solar, whatever, if there's a least cost alternative that can override that, then no. But if that is the most viable and seen to be the most acceptable means of providing energy, then yes. But it's really done on a case-by-case basis.
And we obviously see the same struggle with this in the EU taxonomy, green taxonomy. I mean, this is really a central issue. We got one more hand here. Did you want to say something, Suzuki-san? Go ahead, because you're obviously in a position of much more embracing the LNG and gas picture.
Yes. So therefore, especially under the transition period, we believe that the natural gas and LNG should take a critical role, especially in Asian region. So under the transition finance, we include natural gas and LNG related project. And I also would like to talk about some shift of the priority, or possible priority of the prospect of the energy transition between the COP27 and the expected COP28 next year. So until now, we feel that there's some gap between the view. On the one hand, any new investment in fossil fuel should be frozen. Or on the other hand, new investment, for example, natural gas is necessary for the time being because it will take certain time of the hydrogen or the nuclear, next generation nuclear power to put into practical use. So as some developing countries, especially Africa and Asia, do not have access of electricity. So now we have the impression at the timing of the COP27, the developing countries' frustration erupted, such a guarantee for loss and damage. So from this perspective, JBIC would like to accelerate more our support for the climate financing, but considering the energy security at the same time. So especially after the Russian invasion to Ukraine, as I mentioned, the importance of the dialogue with the energy market player is increasing as well. So, and next year, regarding the COP28 at the UAE, who will probably promote itself as something like a solution provider by supplying energy source reducing GHG emissions. So we think it is very important to engage oil and gas market player, both a producing country and a private entity, to foster decarbonization for the next COP28 in UAE. So I think your question is very timely, and it is a good timing to discuss this issue for the next year. Thank you.
Sharon, do you want to have something?
Yeah, you asked at the outset, Mike, that about is what's happening now with the energy crisis going to speed up the transition or slow it down? And I think that's basically what Bob is asking, and the answer is yes. It's going to do both. But I was really struck when you said that your estimate was that for the transition in the Asia Pacific region, it's going to take $1.7 trillion a year for climate resilience.
That was pre-COVID.
Pre-COVID.
We haven't done any analysis.
But if we just take that as a ballpark, that's a lot of money. And there's not enough investment to both get through the current crisis we have to, and also seed the longer term solution. And that's a really uncomfortable truth, but it is the truth. And we're going to have to do both at the same time, which means we're not going to do both of them as well as we need to. It's going to be a rough time.
Thank you. I'm Neelima Jain from CSIS, and my question is for Leslie. Firstly, I should really commend the ADB Bank for actually attaching some reality to the vision of repurposing or decommissioning young thermal plants. I think it's probably the first multilateral bank to do that. My question is, again, an offshoot to the previous question. And I think you noted this as well, that for ADB, it's not just the transition, but it's also the development, which is a consideration, right? So for a lot of emerging economies and also the developing economies, especially in the Indo-Pacific, energy transition is very much intertwined with economic transition. And so it possibly could be that coal or gas could be the most, or the best possible solution for their economic development. And so I wondered if ADB is thinking about, questions around, if that is the best solution, then what is the best way of building them? Or how do we mitigate the risks around these solutions? Are you navigating these questions at all when you are looking at financing these thermal assets. And again, it's not just about repurposing, and it's not just about decommissioning. It could also be about making the existing assets more efficient. Are you looking at these questions, and if you are, how are you navigating them?
Yeah, thank you for the question. We are certainly. I mean, we look at carbon capture. But we've gone under trajectory. We used to finance clean coal, and that was something that we did as an institution. We haven't financed any coal since 2013, and that decision to not finance coal, period. I mean, gas is a consideration. Coal is off the table completely. That's where we are. So I don't think, and ADB does a lot of policy work as well. So we not just finance infrastructure, we help governments determine the best policies in determining the best sources of energy for them. I mean, that is something we're very deep into, and we approach that differently for each country. I would say that, in terms of your development, so the development side of that equation, and this kind of gets to what you were looking at, everything we do is a very comprehensive approach. We don't just, I think the days of just looking at, okay, we're going to finance a road. We don't, now we finance a road and wastewater in a city, and I mean, it's all integrated. And in the just energy transition space, you have to look at education, you have to look at TVET, you have to look at skilling people. I mean, so it's a very comprehensive package, and we have very stringent environmental and social safeguard policies that go into, we do multiple analyses for every project we do, and we look at these types of questions. Is this the best for the country? But that's also done at a high policy level, and then at a project level. So I guess the short answer is yes, and it's very intricate and very intense to ensure that the affected communities, particularly women and the most vulnerable, are going to benefit from the interventions that the institution makes in the countries.
I also, it was great that you gave Indonesia, that it's the first place that you're retiring a coal plant, because one of the reasons Indonesia uses so much coal is because they have it, right?
Yeah.
But they also have nickel and tin and a lot of the materials for the digital age economy. So that's part of the transition too, like it's turning the wheel towards a different kind of energy production. And I'm assuming that that ADB funds that as well.
Yeah,
that's part of the integral.
That's an integral part of the ETM. The ETM is obviously looking at, what do you do with the workers who are mining coal? We can't just leave them stranded. So how do you repurpose, repurpose, that's terrible. How do you re-educate, re-skill people to be able to go into these new sectors?
Yes, but we're getting up against our limit, but one more question back there.
Thank you. I'm Sagatam Saha from the Center on Global Energy Policy at Columbia University, and I actually wanted to stay on mining and minerals. And it worries me because it seems like we have a variety of solutions that might be long-term plays, so alternative chemistries for things like batteries, recycling, alternative supply chains that need to come with community engagement because we don't want to replicate the harms that we're trying to solve for. But then if you look at the numbers and the amount that we have to scale to not only reach climate goals 1.5, net zero, but to actually follow up on the investments that we're making in the clean energy economy. I mean, look at the Inflation Reduction Act at home. I'm just curious to put a fine point on the question, what are the short-term policy measures the United States and other countries can put in place to bridge toward those medium-term, longer-term solutions that I suspect will be effective, but aren't right here right now?
I think, so if I understand what you're saying is, you're saying a lot of the things that we're laying in, like alternative chemistries, take a while to get. Right. No, I agree. Well, I mean, those kinds of things like take a while until they don't. Every now and then there's a breakthrough and you've got a new chemistry. DOD, I was just talking to a colleague who from the Army. They have a flow battery at Fort Carson in Colorado. So, it's a new chemistry, it's a new kind of battery, and it's working. So, the breakthroughs are happening. but I think that's one of the reasons that we need to understand better the shape of demand, and when we need to have what where, because it's hard to answer that question as far as are we doing enough for the near term? Because I actually think the harder play is in the mid and the long term, especially the medium, right? I think that one of the places that a lot of us who work in the energy materials space tend to be, and I'm sure this is true for you too, we tend to be inherently or just instinctively supply focused because it's the harder question. But at the end of the day, in the near, medium, and long term, the only way that this energy transition succeeds if we also address demand and how we use energy, how much energy we use. We cannot solve this problem if it's just a one-for-one swap of one kind of energy for a different kind of energy. That is something that we can very much address in the near term. I mean, look what's happening in Ukraine and Europe right now, where you're getting a mix of crisis, but also patriotism. People are dramatically cutting the way they're using energy. It's not ideal or optimal. They're not good circumstances, but it shows what's possible when you have to do it. So I think that's one thing in the near term. And there's a different kind of substitution. I mean, electric vehicles, that market is growing very fast. And I think that in the near term, that's doable at the scale that it's happening. So longer term, maintaining that is the bigger question that everyone's addressing. But I'm actually think in the near term, a lot of the things that are in motion, it gets back to the modernization of the policy and the regulatory framework. So there are a number of mines in the United States that are under development, but it takes 10 years to develop a mine. That we have to change. But that, and that's something we could do in the near term, but that means we have to do it and have to give the same kind of attention and effort to the human and policy infrastructure that we do to, the new chemistry for a battery. So I think there are things we could do like that we could very much do in the near term. We could do like this if we can get everyone on the same page, which I think is possible. Not only possible, I think in the next Congress it will have to happen. So that's a big near-term change, is to get our policy, regulatory, and institutional framework working better and the incentives pointing in the right direction.
We are getting up against our time constraint here. 20 years in the oil business, I like to bring in these panels on time and under budget. The mantra from the corporate days. If some of you have some more questions, I suspect we will have a reception out front in a few minutes. You'll have a chance to grab one of the participants to give them a question. A rich set of things. You always start getting really into the interesting stuff just about the time you hit your time constraint, but it's a hard constraint because I have a flight to catch. So it's a hard stop kind of thing, and I know a few others do as well. I hope you'll join me in thanking, I think, a really wonderful group of panelists and a really rich discussion, very subtle. People that really understand what they're talking about and the nuances, and some very good questions. So join me in thanking the panel, please.